Hello, very good morning to all and happy Friday. Welcome to today's Daily Dose of Market Insights. I'm Kelvin here. Good morning and happy Friday. Today will be the 8th of November 2024. So before we start our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, pardon me, leverage trading. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. So as usual, before we jump straight into our short-term intraday technical outlook on the broad-based cross asset classes, let's have a quick overview of what has taken shape yesterday in terms of news flow, economic data release, and its various, we call it impact on the broad-based cross asset classes. Over here. Okay, 1 second. It seems to me that the screen is not moving. Let me do a check again. 1 second. Okay, I think the screen should be fine now. Yep, the screen should be moving. All right. So I believe that all is good right now. So let us proceed with our sharing of what has taken shape yesterday. So let me start with the performance of the broad-based cross-asset classes first. Particularly, I want to share more pertaining to the major US stock indices. So what you will see over here is that very interesting, right? The major US stock indices actually did a pullback, but the pullback only occurred on certain corner of the major US stock indices, which is the Dow Jones Industrial Average and the Russell 2000. So the Dow Jones Industrial Average, which is the US Wall Street 30, that's being showcased in our short-term intraday technical outlook, didn't surpass the short-term pivotal resistance level and traded sideways. So it ended almost unchanged yesterday. All right, the Russell 2000 is down negative 0.43% after it rallied by close to 6 to 7% in the last two sessions due to this Trump trade narrative that's getting the forefront. And surprisingly, the one that is only outperforming is the Nasdaq 100 and the SPX, which especially the Nasdaq 100 is up 1.54% and the SPX is up 0.74%. So the movement of the Nasdaq 100 and the SPX 500 has been driven by the mega cap technology stocks. So if you look at the heat map of the S&P 500, for sure, the one that is deeply in the green are your NVIDIA, which is now the number one market cap stock in the S&P 500 and the Nasdaq 100 after surpassing Apple, up 2.25%, then followed by Microsoft 1.25% and Apple 2.14%, Amazon 1.43%. So all of them are actually up by more than 2% each, except for Microsoft, including Tesla that is up by 2.9% and Meta is up by 3.44%, Google, Alphabet 2.21%. So what I could see over here is that the market breadth, right, of the S&P 500 is only driven by these mega cap technology stocks. Whereas if you look at the rest of the sectors, not much of them are actually in the green. So if you look at the precise sectorial performance, the 11 sectoral performance over here, so what I could see over here is the one that's in the red is financial. So the rest over here is, yes, they are in the green, but not as great as your technology and consumer cyclical, which is up by 2%, and the communication services, which is Google, Alphabet, and Meta, that they are inside this particular sector, is up 1.83%. So later I'll touch on more about the short-term intraday technical outlook on the Nasdaq 100 as well as the Dow Jones Industrial Average when I cover into that aspect classes. So, but net overall, it seems to us that as long as the momentum that is still being seen on the mega cap technology stock, very hard for us to shape that multi-week corrective pullback at this juncture. All right, over here. So with that, then also very mixed performance on the FX market over here. So if you look at the FX market, let me open up the rolling 5-day performance of the FX market. Okay, so take this as 8th of November. As of today, let me expand my screen. Oops, why is it very slow? Okay, 5-day rolling performance. Okay, where is it? Okay, so if you to look at this, okay, let me okay, so the current 5-day rolling performance of the dollar pair against the other major currency. So we see that the dollar actually did a setback, right? It setback. Then thereafter it tries to recover during yesterday's right exactly after yesterday's Powell press conference, and during the Asia session, now it starts to actually inch upwards again over here. So I rather say that it's rather a mixed performance so far on the FX on the dollar pair, the dollar major pair on the intraday basis. And what's interesting over here is that gold actually recovered within our expectation. So if you look at the gold chart itself over here, let me share the daily chart of gold. Okay, so what's interesting for gold, it actually bounces right exactly at our short-term, above our short-term pivotal support level over here, which is close to the 50-day moving average. Ended yesterday's US session with a positive gain of 1.8%. All right, 1.8% after that mean reversion decline has more or less been made its inflection point. So rather positive for gold yesterday. And if you look at the commodities market, the other commodities market, oil still refusing to remain sideways. It can't break above $73.15 per barrel on West Texas crude oil, but managed to hold above the first support level at $70.50 per barrel, also for West Texas crude oil. So later I'll touch more about that short-term intraday technical outlook for West Texas crude oil. Now with that, key event that took shape yesterday was the Fed meeting. So in the Fed meeting, right, there was actually one very comedy way the reporter asked is whether will he resign if Trump asked him to leave, and he said that he won't resign and he will remain to serve out throughout his term. And do not forget, under the Constitution over here, the Fed by right it should be pretty much neutral against we call it Trump whatever rhetoric that comes out from the White House. But what's interesting over here is that in his remarks over here, he did mention that he won't rule out a December rate cut. All right, so he's still in line, having another 25 basis point cut that is being kind of more or less been penciled in by the CME Fed Watch 2 data share, or still a rather high odds of above 50%. And what's interesting, as usual, in this meeting, when asked whether the Fed will adjust the pace of its rate cuts, because this was being brought up because of that potential inflationary pressure that could potentially come back to the US economy from a medium term to long term perspective, especially from Trump proposed policy of having a much more drastic corporate tax cut to bring it down to I think 15 to 16% from the current 21%, and as well as its trade tariffs. Okay, the more hawkish trade tariffs towards China and against the rest of the world. So all these are medium term to long term inflationary in nature. So asking, so the reporter actually asked whether Fed will take the current Federal Reserve decision making, will it take into account of such potential impact on the US economy from Trump policy. But however, he was very kind of very diplomatic and very political, and he did mention that policymaker haven't made any decision about that yet. So that implied the same rhetoric of doing data dependent. All right, data dependent. So if you were to look at it over here, is that yesterday market was reaction was rather limited, but the initial push sell off of the dollar strength managed to halt right? It managed to stay hot right after Fed Chair Powell press conference, which is rather interesting on how the price actually react to it. Later I'll touch on the short-term intraday technical outlook on the euro dollar, the sterling dollar, the dollar yen, and the Aussie dollar. So with that, if you look at the CME Fed Watch 2, market is still pricing a high chance of another 25 basis point cut in the December meeting, which is on the 18th of December, to bring it down to another 25 basis point cut to 4.25% to 4.5% in the Fed funds rate. So if you look at from a aggregated perspective, bringing forward into next year, all the way up to next year. Come on, where is it? Let me show it. Okay, so if you look at next year over here, market is still expecting the same expectation where the Fed funds rate will only end at 3.75% to 4%. That means there'll be only another 50 basis point cut next year coming in March, close to 80% chance to bring it down to 4% to 4.25%. Then thereafter, it will pause in May next year, and it will do another cut again, the June cut, and the June will be the last cut potentially for next year, and you start to see stampede all the way up to October next year. So this hasn't really changed uh, in terms of the expectation prior, because this was almost the same as the day before the Federal Reserve meeting yesterday, and after Fed Chair Powell press conference, the expectation still remains the same. Why? Because market is still pretty much concerned. Why is this only 2 interest rate cut is being priced into next year by the CME Fed Watch 2, which taking into account of the 30-day Fed funds futures, is because of this chart over here that I'll share with you all. Okay, which I shared yesterday. Oops, seems to me that it's a bit cranky. Okay, is this steadily moving up of the 10-year and the 5-year US break-even inflation rate. So take this as future inflation expectation as dictated by market transacted price derived from the US Treasury protected bonds. So 5 years from now, market is expecting inflation to be 2.4%, and 10 years from now, market is expecting inflation US to be 2.33%. So this level is way above what the Fed desired, which is at 2%, their long-term target. So that also explains why only a very shallow interest rate cut is being priced right now in the CME Fed by the CME Fed Watch 2. Only potential 2 interest rate cut of 50 basis point each to be ignited in 2025. So that also explains why the dollar strength managed to still be firm. That means initially there was a dollar sell-off at the end of the Asia session, heading into a European session, but the dollar sell-off actually paused against most of the major currency like the euro and the sterling because of this ongoing push-up in the US 5-year break-even inflation rate that it seems to be rather firm right now, taking into account of the potential impact from Trump policy. All right, so this is the key data and news flow that I'll share with you all and its impact on the broad-based cross asset classes yesterday. So before I start, let's go just to make sure that the screen, everything is working. Let me do a quick check over here. Yeah, I think it should be fine. Okay, so let us continue right now. Okay, let me start off with the short-term intraday technical outlook right now. Okay, starting with the FX market first over here, okay, which is the euro dollar. So with that, let me expand my screen, all right, so that you guys could actually have a better view of the markets. Okay, so this is the euro dollar over here. So yesterday we do have a bearish bias. Why? Because but before the bearish bias, we do expect a potential rebound, and that rebound actually takes shape. And where the rebound stopped exactly right below the 1.0830 short-term pivotal resistance that we highlighted and shaped this slide during the end of the US session, and right now in the Asia session is attempt to test the low of the US session as well yesterday. All right, so still no change, still using that 1.0830 as my short-term pivotal resistance on the euro dollar, still maintain that intraday bearish bias. First support level to watch out for today will be yesterday's Asia session low at 1.0720. A break below 1.0720 potentially could open up scope to the next support level at 1.0670, which is very close to Wednesday US session election outcome low at 1.0 this 1.0683. So 1.0670 is in fact the clear minor swing low area of 14th of June all the way up to 27th of June this year. Only a push up with an hourly close above 1.0830, which is also a breakout above the downward sloping 20-day moving average, will invalidate today's intraday bearish bias to see the extension of this mean reversion rebound continues, exposing the next near-term resistance at 1.0870, followed by 1.0940 slash 1.0955. So that's for the euro dollar. Turning our attention will be the sterling dollar. So on the sterling dollar, the price action also reacted off negatively after that potential bounce that we expected. So it played around the 1.299 short-term pivotal resistance before shaping that pullback over here. All right, during this end of Fed Chair Powell press conference and today's Asia session as well. So no change, still using 1.2990. So I have a bit of excess yesterday, taking into account of the shadow of the candle of this bearish spinning top candle over here. We could see this bearish spinning top. So using the high of this candle here, and also this high of this candle, also very interestingly, right, also coincide with this medium term descending channel upper boundary from the high of 30th of September. So with that, that is 130.10. So a bit of excess at the top. Okay, so using 1.2990 excess 130.10, so that will be my short-term pivotal resistance for today. Still maintain that intraday bearish bias on the sterling dollar. First support level to watch out for it got to be 1.2910 level, which is yesterday's European session. So yeah, yesterday US session low. All right, this US session low yesterday 1.2910. A breakdown below 1.2910 potentially revisit this support zone of 1.2845 and followed by this 1.28 figure level, which is close to the 200-day moving average for the sterling dollar. Only a price action breakout of 130.10 with an hourly close above it will invalidate today's intraday bearish bias to kickstart a mean reversion rebound, a more pronounced one, exposing the next near-term resistance level at 130.60, followed by 131.10 next, which correspond to the downward sloping 50-day moving average as well. That's acting as a resistance level. All right, so that's for the sterling dollar. Now, turning our attention will be the Asia Pacific currency, starting with the Aussie dollar first. Right, so the Aussie dollar yesterday, right, did a push up and break above the 200-day and the 20-day moving average. That was the 66.40 level, acting as a pivotal resistance, and it broke out. And right now, price action now is actually trying to actually go back up towards the 50-day moving average, acting as a resistance level over here, 66.90, 67.20. So with this rather mixed element right now, I will actually turn neutral instead. Okay, so neutral between this 66.40 okay, and close to today's Asia session high over here. Okay, so neutral between 66.90 and 66.40. So only a reintegration back below the 66.40 level. That means price action goes down below the 20-day moving average. Then potentially the bearish pressure could reinsert itself on the Aussie dollar to expose 65.95, followed by 65.20 slash 65.10 next. All right, so flip to a neutrality stance due to a mixed element right now, because you look at the RSI, yes, it start to break below a support level over here. Okay, broken below this support level. Okay, so turn to a neutrality stance between 66.90 and 66.40. Watching 66.40, a breakdown below it for hourly close, potentially reinsert the bearish pressure on the intraday basis to expose 65.95, followed by 65.20/65.10. So that's for the Aussie dollar. Now turning our attention, lastly will be the dollar yen. Still recall that dollar yen, yesterday we do have a bearish bias, so this bearish bias almost hit the support zone, hit the first support zone at 153.49. Second support zone is 152.45, almost hit this level with a current intraday low of 152.69 printed during the end of the US session. So with that, then what we could see over here is that we also start to see a bullish divergence that has already formed on the hourly RSI. Okay, notice higher low, whilst price action shape a lower low over here. So with that, I'll be using a rather tight short-term pivotal support level, which is this formerly minor swing high now turns into a pullback support. And if we do the Fibo retracement of that previous push up during the US election results outcome, or in the midst of the result outcome, that is coinciding with the golden ratio of 61.8% Fibo retracement as well. So using 152.45 as my short-term pivotal support for today on the dollar yen, we will flip to a bullish bias, pardon me, on the dollar yen. So first resistance to watch, it got to surpass will be 153.50 level over here. That was being tested during the Asia session as well. Okay, almost tested, hit, come break above it. 153.50. Okay, above 153.50, potentially revisit the medium-term pivotal resistance at 154.70/154.80 next. Only an hourly close below 152.45. Invalidate today's intraday bullish bias to revisit the 20-day and the 200-day moving average that is confluencing at the similar next support level of 151.55/151.30. Only a breakdown below 151.30 open up scope for further potential weakness on the dollar yen in the first step to see the next near-term support coming in at 150.60/150.30 next. Okay, so that's for the dollar yen, and also sum up the intraday technical outlook on the major dollar pair. So with that, let us now turn our attention to the major stock indices, starting with the Hang Seng 33 or the Hong Kong 33 as per se. So the Hong Kong 33 over here, yesterday during the US session, it did a push up and it cleared above the former range stop of 21,050, and right now there's a pullback that is taking shape right over here. So with that, price action also traded above the 20-day moving average, and if you look at the daily chart over here, it seems to me that it starts to form a curvature. Okay, a push down and a curvature over here right above the 19,790 level. So this level is a medium-term pivotal support level, also close to the 50-day moving average as well. So there's a curvature that's being formed. So with this positive daily price action that is taking shape on the Hong Kong 33, I would actually now be more, we call it, has a more element to support me to actually have a much more bullish bias over here, instead of looking for it for a retest at the 19,790/445 level, which is the medium-term pivotal support zone. So with that, I'll be having 21,570 as my short-term pivotal support level for today, which is correspond to the 20-day moving average as well. And if you were to look at this push up from Wednesday low all the way up to the US session high or Asia session high today, okay, that also correspond to the 76.4% Fibo retracement. So using 21,570 as my short-term pivotal support level, flip to a intraday bullish bias on the Hong Kong 33. Next resistance level to watch will be this minor swing high area over here of 10th of October at 21,550 next. Above it says 22,320. All right, over here. Only hourly close below 21,570 will invalidate today's intraday bullish bias to see another round of choppy movement to revisit the minor range support level that is in place since 31st of October at 20,150. A breakdown below it sees the medium-term pivotal support coming in at 19,790/445, which correspond to the rising 50-day moving average that I share with you on the daily time frame. So that's for the Hong Kong 33. Now, turning our attention will be the Nikkei 225 or the Japan 225. So the Japan 225, on the outcome of the US president election, it hit the upper limit of this complex range configuration over here that is in place since 27th of September, 27th of September. That's trying to trade within this sideways range over here. So what you could see over here is that price action now seems to have started to form a series of higher lower, okay, as being supported by this ascending trend line support. Okay, what you could see over here. Okay, so with that, I will still maintain that intraday bullish bias on the Japan 225 using a tighter key short-term pivotal support for today, which is close to the 20-day moving average, and this congestion area here that has been tested on yesterday can't break down and shape that push up during the during the US session and at the start of the Asia session before shaping that minor pullback right now. So as long as 29,090 short-term pivotal support holds, which correspond to the 20-day moving average as well, we'll still maintain that intraday bullish bias. First resistance it got to surpass will be the range top of 40,155 slash 40,280. Above it exposes the next resistance at 41,050, which correspond to the minor congestion area here of 16th of July and 12th of July. All right, and also if we do the Fibo extension, let's say if this is indeed the start of an impulsive up move taken from the low of here, project it down here. Okay, that also correspond to the 1.236 and 1.382 Fibo extension level as well. Only an hourly close below 30,090, then that will invalidate today's intraday bullish bias on the Japan 225 to see a choppy movement downwards to retest 38,670 again. So that was our former short-term pivotal support level, now confluencing with the 200-day moving average and the lower limit of this minor ascending trend line that I drew from the low of 28th of October. Only below 38,670 exposes 38,265 next. Okay, so that's for the Japan 225. Still maintaining that intraday bullish bias with a tightened short-term pivotal support right now at 39,090. All right, now turning our attention will be the European stock indices, the German 30. So the German 30 yesterday, we do have a very tight bullish, bearish short-term pivotal resistance at this 19,220 level. So price action broke out and right now almost hitting the swing high area that induced that sell off during that outcome of the US presidential election, or the progress of the outcome of the US presidential election. So right now it seems to be is trading inside this wild range again, this rather wild volatile range. So with that, no conviction of any movement right now, and also the RSI seems to be that tracing up a lower low as well. Okay, so with that, I will actually turn to a neutrality stance for today since it's Friday. So neutral between the upper limit of this swing high that induces that steep sell off, 19,510 slash 19,560. Lower limit will be 19,230. So what's 19,230? If I do the Fibo retracement of this steep rebound, that's the 50% Fibo retracement ratio as well. Only a breakdown below 19,230, revisit the lower limit of this range over here at 19,020 slash 18,960, which is slightly below it, which is this minor swing low area of 8th of October. Right, so that's for the German 30. Now, very interestingly, now start with the major US stock indices, starting with the US Wall Street 30. So you know that US Wall Street 30 and the Russell 2000 yesterday didn't move much, and in fact, it tried to actually give back some of the gains. RSI now remains rather bearish after that bearish divergence that was formed earlier on, which I highlighted, and now it's trying to inch downwards and haven't hit the oversold level yet. So it actually paused exactly at the first resistance level, 43,930 that we highlighted yesterday. So still no change, still using the 44,220 as my short-term pivotal resistance level. Still looking for that potential minor mean reversion decline to take shape. Support level to watch out for this potential mean reversion decline scenario, 43,370 followed by 43,060, maximum 42,755, which is correspond to the rising 20-day moving average. So we are looking for this area over here, when the price comes down close to this area, potentially there could be another round of bullish impulsive up move to resume this bullish trend again on the US Wall Street 30. So right now what we are seeing over here in a very short term intraday technical perspective is a retracement of this rather steep up move driven by the Trump trade narrative. Right, but however, if price action starts to push up and break above 44,220, then this impulsive move will be very steeply resume again. We've got to respect the uptrend. Next resistance level to watch will be at 44,700 / 44,730, followed by 44,990, which is the 0.764 Fibo extension and the upper limit of the major ascending channel that I drew from the low, okay, of 1st of November last year. Okay, 1st of November last year. So net overall, since price action is still rather lackluster with a bearish configuration that is being still in display on the hourly RSI, we'll still use the 44,220 as my short-term pivotal resistance on the US Wall Street 30, still maintaining that bearish bias for that potential minor mean reversion decline scenario to potentially unfold. So that's for the US Wall Street 30. So what's surprise over here is the Nasdaq 100. So Nasdaq 100, it actually, we have a short-term pivotal resistance yesterday at around this 2,920 level, which is the 3.68% Fibo extension level. What price action did, it broke above this level and go all the way up, and now is trading just sideways below the next resistance that we highlighted previously at 21,220, which is a Fibo extension cluster level as well. Okay, one time and 21.382% over here. So with that, right, it's rather extremely overbought itself over here. You look at the RSI is extremely overbought. So with that, I will actually turn to a neutrality stance for today on the Nasdaq 100. So neutral between 21,220 and 20,860, slightly below the 20,920 short-term pivotal resistance that we have that was taken out, which take into account of this graphical congestion area over here where it actually traded sideways. Then at the start of the US session, it actually burst up all the way up. So neutral between this 21,220 and 20,865. So only a price action push down below 20,865 with hourly close below it, then potentially we will start to kickstart that mean reversion decline scenario unfolding, with the next near-term support level to watch is at 20,640 followed by 20,850. And if you do the Fibo retracement over here, okay, that also correspond to the 38% and the 50%, close to the 61.8. Okay, let me remove this. Okay, close to the 61.8% Fibo retracement as well. Okay, at the 20,000. Oops, sorry, not this. Let me do a proper one. Okay, 61.8%, 20,500. Okay, but however, if price action starts to have an hourly close and it start to push up again above 21,220, then this move we got to respect this push up. So the next push up over here will be at 21,390 followed by 21,500, derived by this Fibo extension over here. Okay, the 1.236 and the 1.382. All right, so that's for the Nasdaq 100 and as well as the intraday technical outlook on the broad-based stock indices. So with that, let us focus our attention now to the commodities market, starting with gold XAU/USD. So for gold XAU/USD, yesterday it bounced as expected at the 2,630 level. It bounced, almost hit the first resistance level zone before tracing that pullback during the Asia session. So right now what I could see over here is that we have started to see a 1, 2, 3, 4, 5, a fifth wave up on the very short term basis. If we do the Fibo extension, there's also a fifth wave target of 0.382% as well. Okay, so with that, potentially right now there could be a retracement of this short-term recovery. So retracement potential level to watch, or the inflection level, if we do the Fibo retracement taken from the low to the high, that's 50% at 61.8%. So I'll be using this congestion zone here, breakout 2,665 lower limit as my Titan short-term pivotal support for today on gold XAU/USD. So as long as this Titan short-term pivotal support holds for this potential ongoing minor pullback, we will still maintain that intraday bullish bias after this potential pullback ends above 2,728 short-term pivotal, short-term first resistance zone to watch exposes 2,000 760 next. All right, that's the next resistance zone to watch. Only a breakdown below 2665 with hourly close below it, that would negate today's intraday bullish bias to revisit the 50-day moving average, I think, as a support level at around 2630 next. Right, so IE still maintain that intraday bullish bias after that potential minor pullback unfolds for Gold XAU/USD using a tighten key short-term pivotal support at 2665. Now, turning our attention, lastly, will be the West Texas crude oil, WTI crude. So WTI crude, once again, yesterday, we used the 73.15 short-term pivotal resistance level. It came down, right, and hit during the start, before the start of the US session, almost hit 70.50 before staging a bounce again. Can't break above 73.15 and it came all the way down. All right, so with that, it seems to us that it seems to be trapped within this range. So given that it's Friday over here, I would have a neutrality stance for today on the intraday basis. Okay, so neutral between 73.15 and 70.50. Okay, so 7315 and 7050. So neutral between these two range first. But it seems to us that right now, some short-term positiveness has been derived in the West Texas crude oil, is that it starts to evolve in this kind of minor ascending channel from the low of 30th of October. So let's say if today it managed to have an hourly close above 73.15, then we could validate as a potential short-term intraday bullish bias to expose the next near-term resistance at 75.20, which is also very close to the upper limit of this minor ascending channel, which is also confluencing with the minor swing high of 14th of October over here as well. All right, so but it got to have a clear breakout above 73.15 with an hourly close above it. So for now, given that it tested one time, two time, three time, and it managed to actually hold above 70.50, we turn into a neutrality stance first, given that it's coming Friday, neutral between 73.15 and 70.50. So that's for West Texas crude oil. But one thing I want to highlight is some form of short-term positive element that starts to be depicted as price action on a very short-term basis starts to oscillate within this minor ascending channel as seen on hourly time frame from the low of 30th of October. Right, so that also sum up the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the calendar. What are the key things to look out for Friday? So for Friday, right, today will be the end of the 5-day session of the China MPC Standing Committee meeting. So today, at the end of today, they will actually release a briefing by the local press, via the local press, I would say, of what decision has been made. Perhaps, very likely, there will be no details that being come up, but at least some form of briefing that what is the amount of fresh stimulus that the China top policy maker will actually pump up or inject to the Chinese economy. So market is looking at 2 trillion to 10 trillion, and perhaps only over the weekend where China policymaker tends to actually relay their message when the market is closed on how they want to actually allocate this potential 2 to 10 trillion of fresh stimulus measure. So something to look out for, especially heading towards the end of the Asia session between 4 p.m. to 5 p.m. Singapore time for today. So other than this outcome of the standing committee meeting over here, what are the other things to look out for today as we head into the rest of the European session? So at the start of the European session, we do have two ECB officials speaking at 5:30 p.m. and 6:45 p.m. Singapore time, ECB Macau and ECB Singapore. And for those who are looking at the Canada dollar, we do have Canada specific economic data to watch out for, will be the labor data, the unemployment rate and the full-time employment change data up at 9:30 p.m. Singapore time. And in the US session, the one that is important will be related to consumer spending, as we know that US consumer spending constitute to about 3/4 of the US economic growth. So this is a flash preliminary consumer sentiment, not consumer spending, but a leading indicator of consumer spending via consumer sentiment, because as long as the consumer sentiment feels bullish, potentially it will lead to higher consumer spending down the road, down the months. So something to take a look out for. Market is expecting an increase of 71 points from 70.5 previously. So this is the fresh reading for the month of November, or preliminary for the month of November. 11 p.m. Singapore time. And at 12 a.m. we do have Fed Bowman speech, one of the U.S. Federal Reserve officials. So something to take a note of after Fed Chair Powell press conference yesterday. More or less, this official will echo the same rhetoric as Fed Chair Powell. Okay, then what's interesting, on Saturday, we do have China inflation rate data coming out and the PPI out at 9:30 a.m. Singapore time. All right, so with that, do have a great Friday ahead, and I wish you all a restful weekend as well, and we shall speak again on Monday. This is Kelvin here, signing off. Thank you.